there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Thursday. In today's program, I want to talk about how it's the very first day of September and how we're continuing the carnage we started at the end of August. And the same old stories keep popping up and new developments as well. But before we get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So yes, today is the 1st of September, and basically the pain is continuing. As you remember, from last Friday onwards, or pretty much through August, we had a lot of pressure on the market. And halfway through August, we did a video and we had a discussion on whether or not the bear market rally was over, and there were signs that the bear market rally was coming to an end. And then, of course, we had Jay Powell's speech on Friday, which really, massacred the market. And pretty much it's continuing as it stands in the very first day of September. And yesterday, don't forget, I also discussed that September on record and average is usually the worst month for the stock market. So anyway, very first day of September, and the pain is continuing. And as well as that, we've got the same old stories popping up again, which is spooking the market once again. And that's basically China has gone lockdown again. They've locked down again. Don't forget, at the beginning of the year, they locked down Shanghai for about 2 months over COVID, a COVID outbreak, which greatly infected, their manufacturing, their economic output, but also spooked the market dramatically. Well, they've locked down again, and this time they've locked down the megacity Chengdu, which has a population of 21 million. 21 million. So they locked down again to another COVID outbreak. And this is, like I say, the biggest lockdown they've done since Shanghai. And the reason why this is having an impact on the market, because Chengdu is actually a home to a number of massive companies, companies such as Toyota, Volkswagen, and Apple. For example, Apple has a huge assembly line in this city, and this assembly line produces iPhones, iPads, etc., and many other products from Apple. So again, it's a supply issue again. So this is what spooked the market. And basically, global stocks has so far hit a 6-week low on the back of this latest development. So really, like I say, the pain is continuing. We started in August, and like I say, same old story. We had the Shanghai lockdown. Now we got this megacity Chengdu lockdown. So again, this is spooking the market. There's something else which is getting absolutely crushed, and that is the sterling. The great British pound is getting absolutely massacred. Absolutely massacred. In fact, it's trading around about a 2-year low. And everybody, people who know me and watch me, they know I'm a cable trader, which is the British pound US dollar. And I talk about the cable a lot, and I'm very bearish on the cable. It's very difficult to be bullish on the cable at the moment with everything going on. But anyway, ING has predicted that the cable, the British pound US dollar, can or will fall to the March flash crash levels or lows of 1.11415. It's currently trading just above the 115 handle, 1.1605 at the moment. So they're predicting 1.1415. And this is what they had to say. We note some worrying development in the gilt market, where the underperformance of gilts versus British pound swaps suggests some independent concerns mounting over gilts. This is due to the quantitative tightening plans from the Bank of England, or perhaps even some fears over what Britain's Prime Minister plans to do with the nation's balance sheet. And don't forget, Monday, remember this date, the 5th of September. And this is one of my biggest concerns for the British pound is this, Remember, on the 5th of September, the UK will find out who their new Prime Minister is going to be. And the front runner is Liz Truss, And this is what's spooking the market, because what she has to say of some of the plans she wants to do. For one, don't forget, the UK is facing a massive cost of living crisis, huge cost of living crisis. Inflation is currently at 10.2% in the UK, with the Bank of England predicting it to go to 13.4% in October, and some banks, such as Goldman Sachs, predicting it could go to 22% by next year. So it's a massive crisis at the moment happening in the UK. Liz Truss, brand new Prime Minister, she wants to do a number of things to tackle this crisis. First of all is do massive tax cuts, reduce tax, how that's going to work, how the government and how the country is going to find the additional money if they cut tax to do all the things they need to do is, I don't know. The other thing she wants to do a policy review of the Bank of England. Basically, she wants to blame the Bank of England for the current economic situation in the UK. That's not going to work either. And plus, the other thing that she's a very hard Brexiteer. She wants a hard Brexit, which is not going to help the UK economy at all. So this is why the British pound is under a lot of pressure. And this is why it's getting absolutely massacred. And we'll have a look at it in a minute. On other news, Europe's energy crisis. We've got a little bit of good news from this today. A little bit of good news, but I don't think it's time to get out the bunting to celebrate, to be totally open with you. But anyway, Germany announces that their gas storage is now at 84%, and they're indeed on target for 90% by November. Okay. However, don't forget, they've managed to build up this storage because a number of manufacturers and businesses have cut down their usage of gas, and this has helped build up their supply. But like I say, it severely dented them economically by doing that. And it's only a matter of time till Europe goes into a recession. So yeah, by all means, but come November though, winter time, they've been able to reduce usage of gas at the moment because it's the summer. By the winter, they're not going to be able to because of the freezing cold temperatures. So though it's quite good news and it is encouraging, having 90% storage is not enough, especially if no further gas supplies come through from Russia. So yeah, it's good news, but it's still not means they're out of the woods yet. Still doesn't mean this crisis is over. But anyway, let's have a quick look at the market. Let's start off with the euro. Like I said, the euro's had a teeny weeny bit of a boost because of this gas story, because of Germany's announcement. So it is slightly trading just above parity a little bit, currently trading 1.0028. As well as that, it's got a bit of a boost because obviously the market's now pricing in a 75 basic point rate hike by the ECB next week, because of the inflation reading, which came in at 9.1% yesterday. So it is slightly above parity at the moment by about 28 pips. But like I say, I'm still quite bearish on the euro because I think this gas issue, though they've got the storage is quite good, I think that's still going to develop into a problem. I think the ECB has been tepid. Even if they do 75 basic point rate hike next week, it's been a bit too late. So I'm still keeping a very, very close eye on that key level of 1.0027. For now, like I say, the euro has got a bit of a boost because of the gas and because of the 75 basic point rate hike expectation from the ECB being priced in. If we have a look at the cable and we can see what I mean by the cable, like I say, it's trading, it's now just slightly touching that 1.15 handle, currently trading at 1.1599 or just above it, just around it. So it is getting absolutely smashed at the moment, because like I say, it's very difficult to be a sterling bull at the moment. I can see a potential area of interest if it falls any further around 1.1570 being a key level of interest for it to maintain a potential support there. But in general, it is not favoring too well at the moment, which is understandable. It is actually a very weak currency at the moment, like I say, because there's so much going up against it at the moment. If we have a quick look at the S&P 500, again, like I say, we're carrying on with the story of what happened in August, still under 4,000 points, currently trading at 4,930 points. So yeah, like I say, are we going to see the June lows again? And if so, what time and when are we going to see it? Like I say, this is on a daily. So currently trading at 3,929 points. Like I say, the market is still very much spooked. And like I say, we've had now 3 days of lower lows on the S&P 500. Gold is not favoring much better. My beloved yellow metal, it's about to test that psychological level of $1,700. Currently trading at $1,703. Now, the area of interest which was holding it is now an area of interest for resistance. $1,727 is the level it needs to break to get some bullish momentum back in the market. Bitcoin, again, as we can see, it is risk off at the moment. Now, again, once again, under $20,000, currently trading at $19,876. There's many people think the winter is coming for the crypto market because we're in such a risk off attitude on the marketplace at the moment. Like I say, that's something, again, showing that, okay, the market is extremely spooked at the moment. So yeah, the pain is continuing from August. Like I say, September, like I said yesterday, September on record is usually the worst month for the stock market. Let's see if that prophecy comes true. What else is happening today? We've got US initial claims due at 12:30 p.m. UTC. Expectation is for it to coming at 248,000, slightly higher from the previous reading of 243,000. As well as that, we have US ISM manufacturing PMI. Expectation, that's due at 2 p.m. UTC. Expectation of that is 52, okay, slightly lower than the previous reading of 52.8. Don't forget, anything above 50 is considered slightly positive. Anything below 50 is negative. So it'll be interesting to see how that reading comes in today as well. Something else is also happening today. And that is the next episode, or the latest episode of my other series, #Ask James. Now, the introduction to the topic today on this particular video is going to be introduction to candlesticks. And this was done by a suggestion by Jay Davis, which I'm very grateful for. Don't forget, this series is totally different from this normal tixee Live broadcast. It's still a live broadcast, obviously, but it's different because I basically choose a topic, or you send in a topic of your choice, and I do a whole live video just on that topic. And thanks to Jay Davis, he made a suggestion to do a topic on candlesticks. So I will be doing a video today at 12:30 p.m. UTC, 12:30 p.m. UTC, to discuss and do an introduction on candlesticks. So please come along and join me for that. Other events to come this week. But like I said, we have US ISM manufacturing PMI, US NFP, and US unemployment. That's due tomorrow. And NFP is going to be in massive focus, especially as the ADP job report came in slightly lower than expected. So that's going to be key. NFP tomorrow. And because of that, I will be doing a watch along for that at 12:20 p.m. UTC. So this is tomorrow. So please come and join me for that. The market as it stands. FTSE slightly lower, negative 0.95%. DAX currently trading negative 1.27%. And Eurostock 50 currently trading negative 0.99%. So yeah, like I say, brand new month, same old story. Everything is still under pressure and still under strain. The sterling in particular, I think, like I say, I really think Monday next week, which is the 5th of September, that's going to be a potential real barn burner and can put further pressure on the sterling. Like I say, in the UK at the moment, there's not a lot going for it. They had negative GDP reading last time. Unemployment is slightly stable at the moment for now, but inflation at 10.2%. Obviously, you know, they're really suffering. And like I say, this new prime minister with a new monetary policy, that's really going to shake up the market. So, yeah, I really do think, indeed, Monday is going to be a potential big day for the sterling. Definitely. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like. Or share me your opinions. Let me know what you think. Do you think I'm right to be a bear on the sterling? What do you think about the euro? Do you think, like I say, the fact that Germany's got their storage up to 84%, is that going to be enough to get them through the winter? What's your opinion on that? Another lockdown in China. What do you think about that affecting the market like it does? Or, like I say, you can ask me questions, technical questions if you like. Or, like I say, entirely up to you. Don't forget, of course, if you think of a question later, you can put it in the comment section either on Facebook or YouTube. I will see them and I will reply to them next time I go live on air, which of course will be, at 12:30 p.m. UTC for the #Ask James episode. And again, of course, later this afternoon for the US Open coverage, which would be at 2 p.m. UTC. So don't forget that option too. Okay, not to worry. If there is no questions, not to worry. Don't worry. Remember, like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and found it useful and you put up with me my over-the-top enthusiasm for the market, which I simply just cannot help because I love the markets. Give me one of these. It's nice to know that you like what I do. I can see I've got a like already, which I really appreciate. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.